Good morning. Next topic I am going to present about is about the digital currency, which is also known as digital money or electronic money, exists solely in digital form without a physical counterpart. So, unlike the traditional cash, digital currencies cannot be touched, stored conventionally, or manipulated physically. Business and consumers leverage digital currencies for seamless transactions and trading across borders, although their options or adoption may vary globally. So, digital currencies or examples of digital currencies are cryptocurrencies. They are like digital tokens. So, they are a type of digital currency that allows people to make uh, payments directly to each other through an online system. That is, cryptocurrencies have no legislated or intrinsic value. They are simply worth what people are willing to pay for them in the market. This is in the contrast of national currencies, which get a part of their value from being legislated as legal tender. There are a number of cryptocurrencies, and the most well known of these cryptocurrencies are Bitcoin and Ether. And next one is we can have a comparative study on these digital currencies, virtual currencies, and cryptocurrencies. So, what do you mean by digital currency? What do you mean by this virtual currency? And what is mean by these cryptocurrencies? Digital currencies are regulated or unregulated currency that is available only in digital or electronic form. So digital currencies are available only in digital form or electronic form, but virtual currencies that are also unregulated digital currency that is controlled by its developer who developed it, that is controlled by its developer, its founding organization, or its defined network protocol. So virtual currencies are based on the founders, controlled by the founder organization or the developer. And next one is about cryptocurrency. Cryptocurrencies are a virtual currency that uses cryptography to secure and verify transactions, as well as to manage and control the creation of new currency units. So cryptocurrencies have no specific market value. Whatever price the customers are ready to pay in the market, that is the value of a cryptocurrency. So they uses cryptography to secure and verify transactions, as well as to manage and control the creation of new currency units. So these are all the comparative study of digital currency, virtual currency, and cryptocurrency. And next is about talking about the types of digital currencies. What are the types of digital currencies that are now available in the market? First one is three types of digital currencies are there. First one is CBDC, that is central bank digital currency. These are a digital version of a country's national currency issued and regulated by the central bank. They are a form of legal tender and can be used by general public, that is retail CBDC, or by financial institutions for interbank transactions, that is wholesale CBDC. So examples of these CBDCs are China's digital yuan and India's digital rupee are in pilot testing, and the Bahamas has launched the sand dollar. These are all about the CBDC. Next one is cryptocurrencies. These are centralized digital currencies that uses cryptography for security and verification. They operate on a distributed public ledger known as blockchain without central authority like a government or bank. Examples are Bitcoin and Ethereum are the most well-known cryptocurrencies. Next one is stable coins. These are a type of cryptocurrencies designed to minimize price volatility by pegging their value to a stable asset such as a flat currency. Example US dollar, or a commodity like gold. Examples Tether, USDT, and USD coin are prominent stable coins. And next one is talking about the advantages and disadvantages of digital currency. Advantages include efficient and fast transactions. That is, digital currencies enable instantaneous, borderless, and low cost transactions by removing intermediaries. Second advantage is financial inclusion. That is, they can provide financial services to populations that are underserved by the traditional banking system, particularly those in remote areas. Third one is reduced cost. For government, CBDCs can lower the cost associated with the printing, distribution, and storage of physical cash. So, disadvantages include volatility, that is, they can experience dramatic and unpredictable price swings. Then, security risk. Being purely digital, these currencies are susceptible to cyber attacks. And regulation and acceptance. Regulation framework for some digital currencies are still evolving. And the next one is privacy concerns. For the CBDC, a centralized traceable ledger could grant government and more access to control over an individual's financial history. So these are all about the digital currencies. Thank you.